So you're an entrepreneur, you're not in the US, but you've got a US LLC. Awesome. But then comes that one question that probably keeps you up at night. Do I owe American taxes? It feels complicated, right? Well, it all boils down to one simple rule. And today, we're going to make that rule crystal clear for you. This is it, right? The big one. The question that causes so much stress for international founders like you. Do you actually have to pay the IRS? The answer is, well, it depends. But don't worry, by the end of this little explainer, you're going to know exactly what it depends on.
All right, to figure out what your tax situation is, we first have to get on the same page about how the US tax system even sees your company. This is the foundation for, well, everything else.
Okay, here's the first big concept you need to know: a disregarded entity. It's a fancy term, but it's pretty simple. For tax purposes, the IRS basically looks right through your LLC, and it sees you, the individual owner. This is so important because it means the company itself doesn't pay income tax. That responsibility flows directly to you. So if the tax responsibility flows to you, what income are we even talking about? This is where we get to the most important distinction in this entire process. It really all comes down to where your money is actually coming from. I want you to think of your income as falling into one of two buckets. You've got your US source bucket and your non-US source bucket. And the difference is huge. One of these is generally taxable by the US, and the other generally is not. So really, the whole game here is just figuring out which bucket your money goes into. So what kind of stuff ends up in that US source bucket? Well, think about work you do while you're physically in the United States. Or maybe you have an e-commerce business that uses a US warehouse to store and ship products. Or you own a rental property in Miami. You see the theme, right? There's a clear physical connection to the US. Now let's look at the other bucket, non-US source income. This is for work that you do completely outside of the US. Maybe you're a software developer in India working for clients all over the world, or a graphic designer in Argentina. Even if your client is in the US, the work itself is happening abroad. That's the key. Okay, we've seen the two buckets, we've seen some examples, but how do you really know for sure? There's one simple, incredibly powerful rule the IRS uses to decide. If you get this next part, you've basically cracked the code. This is the moment of truth. When it really comes down to it, after you strip away all the details and all the forms, what's the one thing that truly determines whether your income is US source or not? And here it is. This is the golden rule. It's not about where your clients are. It's not about what bank you use. It is all about one simple question. Where is the actual work physically done? That is what the IRS cares about, the location of your real business activity. Knowing the rule is great, but let's actually put it to the test. Let's run through a few real-world examples so you can see exactly how this works for different kinds of businesses. Let's break this down. Look at that IT company with its whole team based in Nepal. Where's the work being done? Nepal. So that's non-US source income. Simple. Now, what about the consultant who flies to New York to work with a client for a month? The work is happening in the US, so that's US source income. And for an e-commerce store, if your products are sitting in a US warehouse and being shipped from there, that's a key business activity happening in the US, so that's US source. See how that one rule just clarifies everything? Okay, so now you know the rule, you can figure out where your income comes from. So what's next? This is the part you absolutely cannot, under any circumstances, ignore: your filing obligations. The consequences are pretty straightforward. If you have that US source income, you'll probably need to file a non-resident tax return. That's Form 1040-NR. And yes, pay taxes on that income. But if all of your income is from non-US sources, you generally don't owe any US income tax. But, and this is a huge, massive but, that does not mean you're off the hook for filing paperwork. I need you to pay very close attention to this. This is where so many foreign owners get tripped up. Even if you have zero US source income, even if you owe $0 in tax, you are still required to file an informational return every single year. This is about reporting, not about paying tax. So what does this filing look like? It's basically two pieces. First, there's a kind of cover sheet, a pro forma Form 1120, and then attached to that is the really important one, Form 5472. This form just tells the IRS about transactions between your LLC and you, the owner, things like you putting money in or taking money out.
So what happens if you ignore this? If you think, hey, I don't owe any tax, so I don't need to file. Well, this number right here should probably get your attention.
That's right. The minimum penalty for failing to file that Form 5472 on time is a staggering $25,000. It's not a percentage of what you owe, it's a flat, painful penalty just for not complying. The takeaway here is so important. File the form no matter what. So let's bring this all back to you and your business. The absolute key is knowing where your work is physically performed. That's what decides if you owe tax. But remember, no matter what, your LLC has a filing duty. So now that you know the one rule that truly matters, take a good hard look at your own operations. Are you set up not just for success, but for compliance too?